On March 10th, 2023, we had the second biggest bank failure in U.S. history. This happened with the closure of Silicon Valley Bank, and it had negative consequences for e-commerce sellers like us. What lessons can we learn from this event, and what can you do to protect yourself in the future? Hey there, I'm Janet LeBlanc from Paper and Spark, and I help makers and artists like you start and scale online shops so that you can achieve your entrepreneurial dreams and hit your financial goals with ease. Today, I'm going to break down exactly what a bank failure means, how it happened with SVB or Silicon Valley Bank, and exactly how it impacted e-commerce sellers like us. Stick around to the end where I'll be sharing what steps you can take to protect yourself in the event of a recession or a future bank failure like this. So first, I'm going to try and break down in plain English what exactly happened, because when this first happened, even as an accountant, I don't really understand what it means for a bank to fail. So let's talk about that. On March 10th, SVB, Silicon Valley Bank, a California bank that was really popular with tech firms, tech startups, companies like Etsy, Shopify, Pinterest, Roku, was shut down by banking regulators. This was the biggest bank failure since the 2008 recession. And in stark contrast, at the end of 2022, last year, SVB had been the 16th largest bank in the US, reporting $212 billion in assets at the end of the year. So SVB started up in the 80s. It's been around for a while, and it was really popular with tech startups. Thanks to the tech boom during the pandemic for the past couple of years, the bank grew a lot recently, and there were a lot of new tech startup companies that opened accounts with them and deposited their funds there. So SVB invested a lot of these funds in things like mortgage-backed securities and U.S. Treasury debt. Fast forward to now in 2023, we're entering a recession. Interest rates are getting higher and higher as the feds try to combat inflation. That means that the stuff that SVB was investing their depositors' funds in was losing value instead of gaining value. So that's one thing that was happening. At the same time, the tech industry is struggling a bit. Funding for startups is drying up, and SVB clients who have their money deposited at the bank, they needed more cash since they didn't have as much funding from other sources. So they're withdrawing more and more of their money from the bank. So SVB was scrambling to have enough liquidity or cash on hand to cover this increase in withdrawals. So they started selling off some of their investments, even though they had to sell at a loss because of the way the market is at this time. On Wednesday, March 8th, SVB announced that it sold $21 billion in securities at a loss of $1.8 billion. That created a little bit of a panic with their shareholders, who then started selling a lot of their shares in the bank, so then the stock price tanked. Meanwhile, venture capital fund advisors were advising portfolio companies to pull their money out of their SVB accounts, which created a run on the bank. So all of these things happening simultaneously basically caused the bank to fail. And by Friday, the FDIC, or the Federal Deposit Insurance Corporation, announced that they were shutting the bank down and placing it under their receivership. This announcement caused some panic in the e-commerce community because there's a lot of tech platforms in the e-commerce community, and apparently a lot of e-commerce platforms had some amount of their money at SVB and possibly used their accounts there as a source of payouts for their merchants or the individual sellers, but more on that later. The ensuing panic led to at least one other bank failure later on the next week, and other banks took hits as investors and analysts started looking for similar problems at other banks. Over that weekend, the Treasury Department, the FDIC, and the Federal Reserve issued a joint statement that depositors at SVB would be fully protected and have access to their deposits no later than Monday, March 13th. But it was still kind of unclear whether all deposits would be covered or only insured deposits, since the FDIC actually only protects up to $250,000 per depositor per insured bank. Now back to the e-commerce community. Apparently SVB is one of many banks from which Etsy pays out its its deposits to its sellers. So we know Etsy has a lot of cash on hand. Apparently it's dispersed amongst many different banks. One of them was SVB, and SVB was one of the banks that it uses to process payments to their sellers. You may be getting your deposit from Etsy daily, weekly, or monthly. We can't be sure what bank it's coming from. For some of us, apparently it was coming from SVB. Apparently at some point on Friday or Saturday of that week, Etsy contacted sellers that would be directly impacted by the SVB failure, but they only contacted those specific sellers. Amid growing concerns and rumbling from the Etsy seller community at large, on Saturday, Etsy eventually released a statement on their seller forum page that they were experiencing a delay in issuing payments to some of our sellers due to the unexpected collapse of the bank. At this point, a lot of speculation started, a lot of angry posts started coming up on the Etsy forum page and in Facebook groups of people either not getting paid on time or not being able to process their payouts, things like that. The next day, Etsy again updated the statement on the seller forum page to say that the issue had been resolved by them reallocating money or redirecting money through other banks, and that the impacted sellers should receive their deposits after only a 1 business day delay. According to this statement by Etsy, they also mentioned that only a very small amount of sellers, about 0.5% of total active sellers, were impacted by the SVB failure and the payout delay. As of the next week, Etsy sellers are still reporting delayed payouts or pending payouts, with some sellers even reporting that their Etsy accounts shows that the payouts were completed, but there's no corresponding transfer or funds in their actual business bank account. So over the course of that weekend and this week, there was a big push to put your shop on vacation mode or delay shipping or push out turnaround times to customers until the issue was completely resolved or at least made more clear, more transparent on Etsy's end. The biggest gripe really seems to be Etsy's lack of transparency over who is impacted and how they're impacted and what they're doing about it. No real official communication, email, or notification has been made to the entire seller community as a whole, other than the statement that they made on the seller forum, which unless you go looking for it specifically, it's hard to find. There's also no way of knowing what bank you're getting paid from when it comes to your Etsy deposits, nor is there any way for us to know how big Etsy's exposure to the SVB failure is. On a similar note, Shopify sellers were also concerned. Shopify is actually listed as one of the big clients on SVB's website even after the closure happened. As far as I can tell, Shopify also didn't release a public statement to their users either, but when asked on Twitter, the Shopify CEO tweeted that the SVB failure would have only a very minor impact for them, as only a small portion of their U.S. operational funds were housed at SVB. Shopify is headquartered in Canada, so it makes sense that their exposure is probably not as big as Etsy because they're headquartered here in the U.S. There are also a fair share of complaints about delayed Shopify payments over on their site's user forums. Shopify later released a statement that only merchants or sellers who actually bank themselves at SVB should be impacted and experience any sort of payout delays. So that makes it sound like Shopify doesn't actually process payment through SVB themselves. Per Twitter again, the Shopify COO later shared a screenshot of an email that he sent to impacted merchants where he offers to help them cover payroll if the delayed payout situation was going to negatively impact their ability to pay their employees. So that's what happened so far with Etsy and Shopify. Whether your payout was delayed or impacted or not, there are important lessons for us to learn. I'm curious to hear from you. Were you impacted in any way from the SVB failure? Did you experience any delayed payouts, or was it just business as usual for you? Were you worried, and did you decide to put your shop on vacation mode? What did you think of Etsy or Shopify's response to this? Let me know in the comments. There are some important lessons for us to learn here as e-commerce sellers. First, I've had some sellers reach out to me and ask variations of this question. Can we trust Etsy? Can we trust Shopify? What about PayPal? We rely on a lot of different platforms and companies and payment processors to run our business, right? Can we actually trust these guys? Whether we like it or not, due to the very nature of the game, we're at the mercy of the bank, our e-commerce platform of choice, our payment processors, the banks our payment processors use, and really just the economy at large here. But there are steps that we can take to protect ourselves from the risks we take on as online sellers. First, and the biggest one really, is don't live paycheck to paycheck. Try not to operate your business paycheck to paycheck. If payouts are delayed again for any other similar situation, you should be able to comfortably operate your business for at least another month or two with the money that you already have on hand. That means you've got to make a plan to set aside money from every sale you make, every deposit you receive, to cover your operating expenses, your fixed expenses, things like payroll, etc. If you're not already following a system like Profit First or setting aside money each deposit to cover these expenses to pay yourself, get started with that system as soon as you possibly can. I've got more videos on how to actually pay yourself, how to set up those systems, how to use Profit First in a simple way available on my YouTube channel. But the sooner you can get in the habit of setting aside money so that you're not operating payout to payout, the better off you're going to be. Number 2, spread your own funds out. Don't put all your money in one basket. Pay yourself and transfer money from your business bank account to your personal bank account. Have some money in each bank account. Don't have everything in just one bank account. Even better if you use 2 different banks for these, one for your personal account and one for your business account. Number 3, pay attention to your money. Do you even know how often Etsy or Shopify pays you? Do you know how often your payouts are and what day of the week they're arriving on? Would you realize if you were missing a payout or if the payout was not the correct amount of money? Check in on your bank account balance at least once a week and keep your books up to date. Please update those books once a month. These e-commerce platforms and these systems aren't infallible. They do make mistakes. Just go read some posts in the Etsy Seller Finance Forum and you'll see plenty of examples of that. Number 4, and this is probably the most important lesson out of all of this, don't put all your e-commerce eggs in one basket. If you're only selling on Etsy, it's time to set up another shop site on another platform. I really don't care what platform it is. It can be your own site on Shopify, it could be Amazon, it could be eBay, it could be in-person markets, brick and mortar stuff, but you need to diversify. I love Etsy for getting started, and I think Etsy is great for established businesses too, but all your eggs in the Etsy basket means that you will forever be at the mercy of Etsy's payment system, their algorithm, their search rankings, their free shipping requirements, and any other games that they want to play. You're at the mercy of playing by their rules. I love Etsy for starting out. I just don't think any seller who's looking to do this long term should build their entire house on Etsy's sand. And 5th and finally, communicate with your customers. Let this be a good customer service lesson to you. Learn from how Etsy has dealt with this bank failure. The biggest complaint from their customers, which are us, Etsy shop owners, has been their lack of communication, their lack of transparency. I tell my husband this every week: clear is kind. It's my motto. Clear, consistent communication and open channels for feedback and support is key to a positive customer experience. You're a business owner too. What can you do to improve on how you communicate with your customers? Hopefully, one of the many things this video and this situation has reminded you of is how important it is to pay yourself for all your hard work, so you are not dependent on running your shop paycheck to paycheck or payout to payout in the event something like this ever happens again. If you need to learn exactly how to pay yourself, then I suggest watching my video, How I Set Up My Profit First Transfers Each Month, next. If you have any questions about this situation, let me know in the comments.